In this presentation, we will take a look at state and local governmental accounting objectives, primary users, and usefulness. Starting with objectives. Objectives provide information that can be used to assess a government's accountability. Recall that accountability being the cornerstone of the governmental accounting, assist users in making economic, social, and political decisions. This objective being substantially different than a for-profit organization where typically we're thinking about the users being external users, people like creditors and investors, thinking about doing business with the organization. Here, we're talking about the users, the people, making decisions related to economic, social decisions, and political decisions. That difference in objective often results in accounting practices and rules, generally with the idea of more transparency, the objective of giving more transparency and information so people can make these types of decisions. Now we'll talk about the concept of usefulness with regards to state and local governmental accounting. Some of these will look familiar with objectives for for-profit organizations, and some of them will be added to those objectives. First being understandable. The financial statements, the accounting needs to be understandable. This is going to be really important for governmental accounting because unlike with financial accounting, when we're thinking about the external users, we're thinking about investors and creditors, probably have some familiarity with the types of regulations for putting these resources together and working with financial statements specific to their investment or credit type engagements. When we're thinking about governmental accounting, however, we're dealing with financial statements that may be given to citizens who may not have as much understanding in terms of financial transactions, financial statements. The governmental accounting being a bit different in terms of the objectives, of course, different governmental accounting units having different objectives, fund accounting being a bit different, and therefore there's going to be a need to make sure that the financial statements are transparent. That's going to be one of the objectives we want to have everything out there, but also understandable, which is going to be an added challenge given the differences with accounting, the broad range of governmental accounting, and the needs that are out there, as well as the users who are using the financial statements. Then we have reliable. We have to be able to depend on the numbers. We have to have faith and trust that the numbers have been put together correctly in accordance with some set of standards. We need to have timely information. We can't have financial statements that are too old because then they're not going to be useful anymore. So the financial data has to be compiled in some type of timely fashion and be presented so that it will be useful to the users of the financial statements. Note that reliability and timely are two concepts that we'll see in for-profit types of organizations in terms of typical objectives for financial accounting. Consistency is another concept that we'll typically see with for-profit organizations, in that we want to make sure that whatever principles we're using are consistent. If we're applying an accrual method to one set of books, we want to apply it to the next time period. If we're applying a modified accrual, we want to be consistent. We want to be able to compare this year to last year. We want to be able to use, and to do so, we need to use the same kind of accounting bases, the same methods, the same set of rules, the same set of standards. And we want to have comparability. Again, this is something you'll see in objectives for for-profit type of organizations. We need to have comparability, and consistency and comparability link together in many ways because, of course, to have consistency will help us to have comparability. Comparability between different types of governmental units. It'd be nice to be able to compare state-to-state type of information. It would also be nice to compare. We want to be able to compare to prior time periods. We want to compare the current period to the prior period. How can we have comparability? We have some kind of standardization. We have some kind of set of rules, and we have consistency with the application of those standards so that the financial statements are going to be standardized in a way that we can compare them to prior periods, to other areas, to other financials.